You're watching Insightful Value, where we dig deep into undervalued stocks that don't get the attention they deserve. Today, we've got our eye on Idemitsu Kosan. Its stock price has been drifting lower, but that might not tell the full story. Is this a hidden gem in Japan's energy sector, or just a value trap in disguise? This video is for informational and educational purposes only, not financial advice. Idemitsu Kosan is one of Japan's largest integrated petroleum companies. They're involved in everything from crude oil imports, refining, and petrochemicals, to lubricants, renewable energy, and even coal. They also hold a major stake in Showa Shell CQ after their merger in 2019. This makes them a powerhouse in both the traditional and transitional energy sectors. In fiscal year 2023, the company reported net sales of over 8.3 trillion yen, roughly $53 billion USD. Operating income came in at around 334 billion yen, and net income hovered around 220 billion yen. Not bad, especially considering the volatility in energy prices. Their operating margin is modest, under 5%, which is typical for the refining business, but they've been working to improve efficiency and cut costs. Importantly, Idemitsu pays a steady dividend, which has been gradually increasing. The current yield sits above 4%, and the payout ratio remains sustainable. It's a solid source of income, especially when compared to the company's low valuation. Idemitsu is also making progress toward decarbonization. They've invested in hydrogen, ammonia, and next-gen battery materials. They're targeting carbon neutrality by 2050 and have been reallocating capital toward cleaner fuels and infrastructure. Still, let's be real, this is a company in transition. A big chunk of its revenue still depends on oil refining and fossil fuel sales. That means exposure to global commodity swings, regulatory pressures, and changing consumer behavior. If oil demand slows or government policy shifts aggressively, Idemitsu could feel the hit. On the other hand, that's exactly what creates the current opportunity. Many investors are underestimating Idemitsu's ability to pivot and evolve. The company has strong cash flows, a conservative balance sheet, and room to invest in growth without overextending. Its valuation looks cheap, trading at a low PE multiple compared to global peers. So why consider Idemitsu now? The energy sector in Japan is consolidating, demand is rebounding post-COVID, and government support for domestic energy security could provide a tailwind. And if oil prices stay relatively stable, the company's earnings should hold up well.
On the flip side, the risk is in the transition. If the company fails to execute its renewable strategy or gets stuck in legacy assets, investors could get burned. But if they succeed, today's stock price could look like a serious bargain in hindsight. At Insightful Value, we deliver in-depth research on companies like this, businesses flying under the radar with strong fundamentals and long-term potential. We strip away the jargon, focus on the numbers that matter, and bring you clear, data-backed insights. For more analysis like this, head over to insightfulvalue.com. Don't forget to subscribe to this channel